Welcome to Commodity TV and a company update for Copper Mountain Mining. Copper Mountain Mining announced positive results from their 2020 feasibility study for their 100% owned Eva copper project in Queensland in Australia. The 2020 FS demonstrates significantly improved economics and operating metrics, including a higher after-tax NPV, increased production, lower cash costs and a longer mine life when compared to the prior 2018 feasibility study. The after-tax net present value at an 8% discount rate is at $437 million and the after-tax internal rate of the called IRR is at 29%. The total initial development capital stands at $382 million. The mine can produce in total 1.5 billion pounds of copper, which is a 57% improvement to the 2018 study. The average annual production shall stand at 100 million pounds copper compared to 80 million pounds, and even more important, they expect the C1 cash costs per pound at $1.44 US, of course, per pound compared to $1.74 in the 2018 feasibility study. The projected mine life with those improved numbers will be then at 15 years instead of 12 years. The total initial development capital is estimated to be approximately $382 million, which includes a contingency of $42 million and pre-production revenues of $11 million. Mining will be conventional open pit with drilling, blasting, loading and hauling at the Eva copper project. 7 pits make up the project's mine plan. Little Eva is the primary pit and will be supplemented by progressively mining 6 satellite pit areas at Blackheart, Scanlan, Turkey Creek, Bedford, Lady Clare and IVN. The pit designs for the 7 deposits are based on a Whittler-Grossman optimization at $2.75 US per pound copper price, generated using measured and indicated mineral resources only. Mining costs are based on a first principles model based on locally sourced costs for major inputs. The waste to ore strip ratio is only at 2.2 to 1. With an overall copper recovery of 87%, the project's total copper production is expected to be approximately 1.5 billion pounds of copper, while gold production would be 205,000 ounces based on a gold recovery of 78%. Metal production on an average annual basis would be 100 million pounds of copper and 13,650 ounces of gold. However, the first 2 years of mining are expected to produce approximately 128 million pounds of copper per year. The process plant is designed to mill 31,200 tons per day for an average throughput of 11.4 million tons per year. The processing flow sheet will recover a copper and gold in concentrate form. The flotation concentrate will be thickened, filtered and stockpiled for shipping to the Mount Isa smelter. Full transportation, smelting and refining costs were based on the company's existing long-term contract with Glencore's Mount Isa smelter, which is situated 194 kilometers to the southwest of the Eva project area. The project is near existing infrastructure with power available through a 220 kilovolt power line. Water for the operations will be supplied through a well field located near the processing facility, pit dewatering and water reclaimed from the tailings storage facility, all of which are located on the company property. The well field has been drilled, pump tested and verified by independent hydrologists as sufficient for the project's water consumption's needs. The Eva copper project is a fantastic future project with a reasonable capital investment and return, as well are the project economics very positive. The company calculates around $3.04 US within the first years and $1,466 US per ounce gold. Of course, the copper price is still away from this, but this can change immediately in the next 12 to 18 months. The gold price is much higher, but copper is the important metric. Copper Mountain does the right thing and works strategically on a bright copper future and is a great call option on a much higher copper price. The company is also part of the SRC Mining in Special Situations certificate. Check out the company and thanks for watching us. Bye bye from Switzerland.